Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's conversation is with Chad Van Handel, the Chief Lending Officer of Unison Credit Union. Chad and I delve into their plans around building more personalized marketing and how they can really extend the high-touch nature of in-person interactions into the digital world. Why they've begun investing in more kinds of business lending outside of the more traditional consumer focus on consumer lending, and why that's, they think, a really great strategy in terms of diversifying their income streams. And a few of the other initiatives Chad has led around really how they're putting excess deposits to work with, again, one of those emerging themes around excess deposits and a way to put them to work quickly. I think it's a pretty interesting conversation continuing on our theme of talking to some credit unions. And Chad has maybe the boldest of bold predictions. I'd love for you to listen to the end and see if you agree or disagree with his take, but it's nothing if not bold. So please enjoy the conversation. Chad, thanks so much for joining us on the podcast today.
Yeah, thanks for having me.
Yeah, I've been looking forward to this conversation. So you and I were talking in advance, and you hit on one of these areas that you guys have focused on that I feel like is underinvested in by a lot of the financial institutions I talk to, specifically the personalization of marketing. Mm-hmm. So I'd love to dive into what you're doing in that space and kind of your journey trying to get from maybe where you started and why you felt like that was an important thing to invest in.
Sure. Yeah. So I had worked at most of my career has been at larger organizations, and they had this, the CRM that was out there, and so they had the CRM. They also had some marketing automation that was tied to it, and it made the selling just that much easier for me. It brought leads into my inbox. It allowed me to sell more effectively versus cold calls. There was a lot more warm calls. And so coming to a smaller organization, I really saw that we could kind of utilize that. We could make our time more effective, more, just more efficient by being able to increase the marketing automation. And historically, we had worked with an agency. We had paid a large amount of money to the agency, and they'd give us back some reports, but it wasn't always great reports. We didn't know if the marketing was hitting the target or not, and so we pulled it in house, and we've been on that journey now for the last two years.
Wow! And what are how do you think about the investments you have to make to go from an agency model where a lot of the process, the technology, the people, it's kind of outsourced, right? It's not yours. And then you got to build some of that capability in house. Yep. How do you think about where those where the investments are? And if anybody, just assume somebody that's listening here is going, hey, we got an agency, we're thinking about going in-house. Like, what's your advice for what you need to do to get that transition right and set yourself up for success running that stuff internally?
Sure. I mean, I think a lot of the tech companies out there have made it easy from an analytics standpoint. I mean, you can build that muscle internally these days to be able to look at your analytics, see what kind of tracking is going to your website and what that all means. And then beyond that, there's a lot of other companies that are out there all across the spectrum. You can pay a lot of money or you can pay a little bit of money, but all of them have some capabilities where you can do it in-house, and you don't have to have somebody outside or pay somebody outside to do it.
Interesting. And were there staffing, particular kinds of roles you were looking to bring on? What was that kind of the people side of the investment that made the most sense to you?
Yeah, we have we had a VP of marketing that we added in the last 2 years that's kind of helped with that. And she's also had some additional staff to be able to make sure we're going into the marketing automation and be able to see the tracking, and that we're getting the use out of all the stuff that's coming in throughout the machine, so to speak.
Yeah. Mm-hmm. Now, I'm curious how you think about, one of the things I learned as I got into the financial industry space was that the business model really revolves around multiple transactions per customer. The cost to acquire usually doesn't make sense for a singular product. Maybe it does, but it's not super profitable. But you want that customer coming back. And so figuring out, I think a lot of the history of how we did that was the branch, the relationship. People came in, they needed something, they had a relationship. And I feel like that's shifting now where people are browsing the web, they're doing other things. And so that proactive outreach, you think of moving from kind of a sales and branch, my employees know how to talk to somebody about the right products. That's how I get them to transact. Now I got to figure out when somebody needs a product, what the right message is, how I hit them, what the right medium. How do you think about how you build a strategy to really get that right offer in front of that right customer at the right moment, so that the marketing is effective and not kind of, I think we were talking earlier, people often unsubscribe. How do you make it relevant, timely, what are the kind of secrets you have in that front? Because it feels like that's a huge part of what you have to get right to make this successful. But it seems like a pretty big challenge to actually be able to execute that effectively.
Yeah, so we're definitely not experts, and we're on the journey right now, trying to figure out what is that right way to connect with that right member at the right time when they want that right product. Mostly we're trying to be available, when our members need us, when they want us, and be able to kind of speak to them at that time. Trying to build omni channels that we can have them go to the web and put in a loan app, at 10 o'clock at night if that's what they want to do when that need arises. Be able to, again, transact on their time is really important for us. So, as we kind of work our marketing, as we kind of tweak things and try to provide good resources to our members and prospective members, utilizing kind of the data that comes in, who's clicking on what, what are they clicking on and where do they go from there? And then just continuing to kind of build that institutional knowledge of what we've seen, what these patterns are that we've seen, and how can we utilize that going forward with our marketing spend.
Are there any particular patterns that you've seen that stick out to you? I mean, it seems like one of the questions, like when somebody's in market for certain kinds of products, feels like an interesting question for how you try and identify. But I'm curious if you've found any patterns in the data that are maybe they are intuitive. Sometimes the best patterns are like they make sense in retrospect, but then you didn't predict them when you were looking at it in advance. But are there things that stick out to you that are interesting kind of patterns you've identified in that work so far?
Yeah, I wish I could say that there are at this point. Again, I think we're still a little bit too early. I mean, I think the only pattern we've seen is that there's no pattern, basically. We have members that have been with us for a very long time that, we've been doing mortgages for the last couple of years and didn't know we did it. And although we've had a bunch of newsletters and we've had banners that have kind of been out saying that we do some of this stuff, I think one of the things that's very interesting, we do a poll on our marketing newsletter, and just the engagement we're getting with that poll is very interesting. So it's okay. So people, like interacting here. How can we make it a little bit more wellness based or financial education based, so that they're interacting with that content as well.
Yeah, that's interesting. 'Cause I do think the newsletter is an interesting concept. I'd be curious the history and how you think about that, because I do think a lot of times digital marketing or outreach for many institutions is kind of like we put it on the website. And I think so often people come to the website to do something and they don't really want to engage with content, or like I came to pay a bill, to apply for a loan, to transfer some money from here to there. And I want to do something else. I want the shortest path between A and B. But then we're trying to inject that kind of educational content. And the newsletter feels like an interesting, it's not I came to the site to do something and we put a link up here, here's how to do better retirement planning or whatever. But it's kind of in the middle. So tell me a little bit about the history of the newsletter and how you think about the role that fills in your customer journey.
Sure. I mean, as a community-based organization, we're trying to interact with our community at all times. And, we don't know where our members want to interact with us. And certainly this newsletter, we had some email addresses. We had people that were opting into, receiving communications from us. And so it just kind of, moved from there. And then it's also kind of moved to a point where we're asking for that email address, asking for that permission to provide in that newsletter and keep them up on what the credit union's doing and try to share a little bit of personal side about the credit union, but then also make sure we can provide some wellness and education to them as well.
I like it.
And I do, in a perfect world, I would love to see our website be a place where we could house resources, where people spend time, where it's obviously we're not going to be a social media network on our website, but to be able to engage people and build that, I think would be a great end game at some point. Because again, I think you can keep people on there. It can be a little bit stickier, but it is going to take a lot of investment to do that.
Yeah, my sense is you absolutely can do that. The challenge is if you think they're going to organically show up at the site for that, you're wrong. So I think it's a question of how do you have the right content and information that's engaging, but also how do you let them know and bring them to that content or surface it to them in that moment at that time when it's relevant in a way that's not pushy, because they're not randomly browsing your site. Right. Hey, I got some reading time. Like that's, so I think that's where I think that personalized marketing becomes so interesting, because it's like, if I have the resource, I've got to get the resources in front of the person, and the website's a great place to house them, but I got to get them there. Sure. And I've got to do that probably on a repeat basis in a timely manner. And that's where I think that personalized marketing is a really interesting strategy, and one I'd love to see really well invested in by many FIs. I think there's a ton of opportunity to drive value for your customer when you can do that. But there's so many resources that are just sitting there like, hanging on the side of the website.
Right.
Nobody goes there. Or, we had a blog for a while that we used, and you'd post it and you'd advertise it on social media, and it would be really big for a while, and then it would just like not be anymore.
Yep.
And so how you highlight the right content to the right customer in the moment, that's, I think, that the magic of that is not that where does it live, but how do you surface it when they're not necessarily out there looking.
I think we have to find, you have to find that niche and then kind of build the base from there, kind of get that core group of followers, and then kind of build from there is one of the ways to do it. I mean, we're going to certainly take some failures along the way. I mean, we tried to do some seminars and in-person things and webinars that just didn't get a lot of buy-in from people. As much as we've got 18,000 members, and we're trying to blast it all over different channels.
Mm-hmm.
People just weren't biting on, what we were selling, or the tagline just wasn't sticky enough for them to want to, register and show up for something like that.
Now, I wanted to dive into something else, because you kind of like, if my intuition of banking has been built around banks, you kind of flipped the story on me in our conversation earlier, which is, I think, many traditional financial institutions and many banks are kind of very commercial real estate, commercial lending focused, and have like this consumer business that's mostly mortgages and then some stuff, but pretty small outside of that. But many credit unions are kind of reversed, and you guys made a choice to kind of add more business lending to the mix as a diversification. So I hear a lot about consumer lending being the bank's diversification strategy. For you guys, business lending was like an income diversification strategy, which was kind of a different perspective that it was interesting. Tell me a little bit about your journey to decide, hey, we want to get into a little bit more business lending and the kinds of things you're doing there.
Sure. Yeah. So the decision does actually predate my time with Unison. I've been here 2 years, but 3 years ago, they really decided they wanted to diversify their revenue stream away from just kind of the consumer and retail and venture into this business lending space. And so I, between kind of that first 6 months after they launched it, I was at a bigger bank that was being acquired. Actually, they were selling their branches to a local bank, and it was a good breaking point for me to kind of look for something else. And I actually grew up in the town, 10 minutes away, or not even 10, probably 5 minutes away from our headquarters here in northeastern Wisconsin for Unison, and it was just a perfect fit for me to kind of come back and do that community banking. And as we looked at, where can we play in this business lending space, really the rental property investing was a place that jumped out. I mean, we understand real estate, we understand mortgages. This is just kind of taking it to the next step. And people that have W-2 jobs or are looking to just build that separate passive income stream, it's a good move for somebody to kind of look at buying a property and kind of jumping into landlording at some point. So
how do you think about getting the institution ready to underwrite and understand the kind of risk? Because my understanding is this kind of loan, because you're relying somewhat on the income stream from the rental to afford the payment, it's underwritten quite differently than like a traditional mortgage where you're looking at the W-2 going, can the income pay the bill? And here it's kind of like, can the rental income pay the bill? So it's pretty different. I'm curious how you think about building out the capability, and then also how you think about getting risk committees and other groups within the institution on board with a different look at how you underwrite risk in this way. Because it is, it's pretty different. And on some traditional metrics, those kind of loans can look extremely risky, right? Like, I can't afford 2 houses at once and make both payments. And like most people probably can't. And so the second home looks very risky on a traditional sense from that perspective. So how do you think about both the building the capability to underwrite it well, and then bringing the institution along in the decision to accept that kind of different approach?
Sure. And it's 2 separate situations. There's the first-time landlord, and then there's certainly the person that's got the portfolio. For someone that's a first-time landlord, it's kind of just relying on, what did they do in their job history? Have they used credit appropriately? Do the numbers make sense? Are they kind of, is their plan make sense? And then buying into that vision, looking at the collateral, seeing that they've got some money for a down payment, and then, helping them put the numbers together. And some of the places have a lot of renovations. So then also working, okay, how can we, afford these renovations, whether within the project or do you have reserves outside the project to get these taken care of? So that's one piece of it. Obviously, credit score is another one, which, obviously you guys you guys are more AI based, but certainly credit score, for better or for worse, tends to be something we also tend to look at. From a portfolio standpoint, there's also a lot of messiness with a portfolio. Whether you've got repairs expense on a specific property, or you've got other types of expenses that are one-time expenses. So it's working through the numbers, trying to understand, what does this look like in a perfect world or on a future 12-month basis, and then being able to kind of build that model that can service the debt and then it's not over leveraging somebody.
Yeah. Are there other areas of business lending that you're looking at outside of the kind of like, first time landlord or kind of, I'll say the rental property kind of model, which is really what we're talking about. There other kinds of local business lending that are intriguing to you or that you guys see a lot of opportunity in?
Yeah, so we certainly do owner occupied businesses. If they've got a piece of real estate, we'll do do the real estate typically as an easy type of a transaction for us. We'll do some equipment for those businesses, but really, I think I just see this the world, because of the internet and Shopify's and some of these ways that people can sell online. I just think that there's definitely a world where people can do a side hustle where they can take that hobby, that woodworking hobby or something else, and really refine that and turn that into a small secondary income stream at first, and then build up that stream to a point where it may kind of be their primary stream at some point.
Yeah, how do you think about underwriting that kind of risk in investing in those businesses? Because it's like lots of niche businesses, lots of niche markets, understanding the opportunity and the risks. It's a pretty, we think about this in terms of areas where the kinds of analysis we do and where risk is poorly understood and hard to define, and you could expand access if you could define it better. But it feels like a pretty diverse set of risks and different set of like criteria. Is that a manual process with just people you've got that know the industries, or how do you think about approaching understanding risk in a context like that?
Yeah, I would say early on it is HELOCs and it's some consumer unsecured loans for people that have kind of built up that credit profile that makes sense. And so it's I think that's the way that it starts. But then again, once you start getting a couple years underneath your belt, there's certainly ways to be able to do that more on the business side. But yeah, I think at first it starts with kind of utilizing some of the personal lines of credit and HELOC and things like that you have available to yourself, and then like I said, building up that business and being able to show what you can do with it.
Kind of ladder up that credit utilization as you grow.
Exactly. Yeah.
Yeah. Kind of more traditional approach. I like it. I'm just fascinated in this kind of like investing in the business space because it's I think it's something that's near and dear to us as well. And I think a challenging thing to do, like the small businesses are hard to support, but so valuable for your community when you can do it right and actually enable those businesses to grow and to thrive. So I know you and I were also talking in advance about maybe the most common topic. I kind of feel like a broken record when I talk about like, cash up, loan demand down. What do we do? And obviously investing in business lending and trying to drive some demand through personalized marketing are two ways you kind of respond to how do I drive more lending assets onto the balance sheet? How do I think about improving that ratio? But I think you guys have done some other things in the what do we do more immediate term to put some of that cash to work. Can you talk me through some of those? And I know sometimes the ways credit unions need to approach these things are different than banks. So assuming not everybody is a credit union in the audience, can you walk us through kind of how as a credit union you take advantage of some of the opportunities there in the near term?
Sure. Well, first to kind of lay the groundwork. So we have 6 branches throughout northeastern Wisconsin, Appleton to Green Bay. Go Pack, go! We've just been very good at generating deposits in our footprint, and so even pre-2020, we were able to have a very high deposit to loan ratio, and so we've been working to kind of again deploy those deposits prudently throughout the market into loans. But 2020 hits and the gap widens a little bit. So we've been kind of scrambling to try to make sure we can make those good investments, that we're not sitting with all these customer deposits, that we are putting them to work. So we have done we've purchased some loan pools. We've done some loan participations on the MBL side, member business lending side. We have also started to look at, or we're kind of down the path of trying to look at other channels. We want to making the credit union accessible to all people at all times, that they're looking to do business. We have gone down a new loan origination system that we're working on. It's going to be more of an online application. And then the end state of it is to have an automated approval process that, instantly or a few minutes, you get a decision, hopefully, at the end of that. And then that'll take, like I said, it'll take some of that pressure off of our team to have to underwrite those deals, if we can get the template right. And then, like I said, gets that member the instant approval that they want, and they can move forward with kind of what they want to do with it.
Yeah, I think that motion too, It's probably one of the other. I was asked last night in a conversation with our team, like, what are the themes I've gotten from the podcast? And I think one of the really interesting ones is this: how do we reduce the administrative burden on our team members, our staff, our call center to process loans, to review documents, to look at applications, and move them to what we were talking about earlier. How do you give advice and consultation and allow that kind of automated decisioning to say, yeah, when you're ready to transact, that should be easy. But the decision of how and when and what to transact with is a more complicated thing where our team members have a lot of value to add to customers to understand the options there. So I think that moving down the path, I know we always want technology projects to be like one and done, but I find they're much more iterative, additive, and they come in phases in time. But I think that motion towards automated decisioning is the right path to where you get to a good place to be able to kind of it's not like you're letting go of people. You're really helping them move up the value chain in terms of what they do with the customers and their interactions.
Yeah, and we're a $290 million organization. So, I mean, I think we're smaller than some of the other institutions you've talked with. Obviously, we don't have a war chest of funds to be able to invest in technology. So we're fortunate that the credit union service organizations that are out there that we can work with that can help us kind of build that technology and customize it the best we can kind of within a parameter. It's been great for us, and helping us be able to do controlled growth is kind of the path we want to go on.
Can you describe what a QSO is for the audience members that maybe you're not as familiar? And then you talked about loan participations, and I'd love you to dive a little bit into, because I think that often goes hand in hand with some of the QSOs you work with,
Sure.
How those work and why there's value for you in that kind of model.
Sure. Yeah. So Credit Union Service Organization, again, is basically a bunch of credit unions that came together to invest in a technology that seemed to make sense for a majority of credit unions. And so then they've been able to build a team that can market that product or service out to the credit unions throughout the country. And yeah, like I said, we've been able to kind of use their expertise and, see what other credit unions are doing, some of our peer credit unions in other parts of the country. And yeah, that's been invaluable for us to build our balance sheet and build our capabilities. And then moving on to the loan participation, same thing. I mean, we've got a QSO actually in the southern part of the state that brings a bunch of credit unions together, is able to show us some deals that came through their doors, and then we're able to look at the risk profile, see if it fits with kind of where we want to go, and then be able to throw some money at a deal to be able to help a business get some financing.
Yeah, I love that model because it's so true that for community credit unions or community banks, more community oriented institutions that are smaller, like the scale involved in implementing and deploying a technology project, frankly, just diligencing technology or partners, it can be daunting. Not just the purchase, but even just the how do I manage, how do I get the staff to understand and go through the process. And so the kind of coming together to kind of share the expense and resource and then take advantage of the opportunities, I think is a really interesting model for community-based institutions. So something else we've been learning about, and I think it's a fascinating approach, and it gives you guys the ability to diversify a little bit without having to fully invest into particular technology product area up front.
Mm-hmm.
Was there anything else on your list that you wanted to talk about today that I forgot to ask about?
No, beyond that, I mean, obviously the fraud and cybersecurity piece is something that kind of keeps me up at night. I mean, we're dependent on our employees to kind of ferret out any of these potential situations. And so, again, any cybersecurity attack could kind of cripple us at some point. But we've been very fortunate that, again, to as a small organization, to really kind of have good partners that watch over us, and then also making sure that our staff is also keeping an eye on kind of everything that's going on out there and protecting them.
Any shift in threat? I mean, you brought up cybersecurity. I'm curious if there been any incidents recently. Not that you have to go into specific stuff, but any kind of change in threat profile or things in the more immediate term that make that more top of mind. And I think we all kind of live constantly reading the news going, oh, somebody got hacked and my credit card number got out the door last week for the umpteenth time.
Right.
And I'm being offered credit protection by the fifth guy this year. Other than that, where I think it's kind of always, on the mind to some extent, are there reasons that comes to the top of your mind in the near term?
Yeah, some of the government stimulus funds have been a little bit cloudy. People didn't always know what was coming in, what was going out. So I think people have kind of fraudsters have used that as a way to to confuse people and trick them into doing some things that they shouldn't be doing, providing account numbers or different information like that. Same thing with the PPP funds and like I said, just different unemployment funds, just a lot of different schemes that are out there. So making sure we understand, why are you requesting this wire? Did the person did you really speak to somebody on the other end? Is it somebody you trust, or is it something that, like I said, is a little bit fishy? So then we teach our employees to make sure we're asking questions and trying to really get at the heart of what they're looking to do. And that goes back to just customized approach, trying to, again, differentiate ourselves and make sure they have someone they can talk to, someone they can reach to get those questions answered.
It's a really good point that as you've got government programs trying to stimulate the economy and put money into circulation, that equals an opportunity if you're a bad guy and in a heightened sense of risk if you're, in a distribution chain, so to speak, where you've got to be careful about, how you're being smart about where that money goes out. Mm-hmm. Yeah, it's certainly something we see. There's a constant, there's just a level of, attack and some of them quite sophisticated these days.
Right. Exactly.
It's interesting. Well, Chad, I appreciate the conversation. This was great. I think that I typically end this with the same 3 questions. So we've done this long enough. Most people now listen to the podcast. Right. They know these things are coming. But let me ask them to you. I'm curious what you have to say. So my first question is always, what's the best piece of career advice you've ever gotten?
So I think the best piece of career advice I've gotten is, you'll never regret learning a little bit about emerging technology. I just, when I was high school, just learning to type and learning about Microsoft Word and Excel and PowerPoint. I think just being able to take a little bit of time, learn how to type, that set me apart for that first internship. I was able to kind of, although I didn't have the experience, the work experience, I was able to kind of work the technology and kind of talk the talk in some regards with that. So I just think, there's so many, so many courses you can find out there, free courses that you can learn about the technology that's out there. So take a little bit of time, do a module, try to teach yourself what's out there. Cause like I said, you'll never regret that. And it'll certainly kind of help move your career forward.
Are there emerging technologies now? Like if you were 22, 23 coming out of college going, hey, I want to figure out the emerging stuff. It's different than it was when you were in school or I was in school or younger. What would be on your list of top 2 or 3 things you'd want to dive into?
Sure.
If you were that age now, or maybe you're still doing it. Even I still do that, but I'm curious what's on the top of your list of emerging technologies to be on top of.
Well, not really an emerging technology, but I'll tell you, a digital SLR camera, it's super daunting because there's a lot of buttons and stuff on there, but taking some time to just kind of learn how the camera works and, all that can be learned about learning photography. I think that's something that, everybody should have a basic understanding of. And then moves on to Photoshop. Photoshop can be a very intimidating type of a product as well with a lot of different things. But, if you can learn what's in Photoshop, there's a lot of other apps that are out there that can do some of that editing at a different pace for you. But, learn the nuts and bolts of a Photoshop, take a class there. Like I said, you can move on and learn other types of stuff like that. So.
I like it. My son's interested in photography, so we've had to go through exposures and focal lengths and aperture versus shutter speed, and it's fascinating to understand the details. Even if most of the time you just whip out your cell phone and point. You can do a lot if you understand just a little bit about how those things work.
Excel too. As much as there's a lot of stuff out there. There's a lot of cool things you can do in Excel that have really come out just in the last 5 years. And as much as I learned it early on in my career, a refresher on something like that with just, again, some of the ways you can sort data or use data or extrapolate things. Like I said, I think that's always good too.
You got to know how pivot tables work.
And that too.
You got to know how pivot tables work.
Yeah. And even with some of the real estate investors we work with, to have them get into Excel and be able to just kind of work some of their numbers, even at a basic level. Like I said, that helps the world for us to be able to have somebody explain why these numbers go together the way they do, and being able to move quicker through that than having to physically add things up, using some of the calculations that are in there. Like I said,
or what I see a lot is like, let me call our analyst team, and we'll look at that and go, spreadsheet, just do a little math.
Exactly.
Understand it yourself is actually, I do think it's a pretty valuable skill. I agree. Second question, what's the best advice you've gotten about consumer lending or consumer finance?
Sure. I think the best advice I've gotten about that is, that every touch with a member customer is unique. And so it's easy for me, as somebody who's done this, hundreds, thousands of times, just to move through the motions to get in that routine. I mean, that might be their first time experiencing Unison. That might be their first time or first time in a couple of years of coming into the credit union. And we just need to make sure that we treat each individual uniquely, customize that approach, make sure we're asking the right questions or trying to help them consider things they may not be considering. Because like I said, that first impression is so important. And like I said, we want to get off on the best foot with those new members.
Feels like if you can turn that into a digital touch through personalized marketing, that's really, that ought to be the goal, right? That personalized experience, one-on-one with the unique experience.
Exactly.
All right. And my last question, what's a bold prediction for the future?
I was dreading this one because there's not too many.
You have time to prepare, Steve. You're on the spot.
So I think what my bold prediction is, I'm certainly somebody that skating to where the puck is going, trying to stay ahead, what fintech firms are out there. I think my bold prediction is going to be in the next 10 years, one of the top 4 banks is not going to exist in its present form. And whether
points for bold, Chad. No,
whether I'm not smart enough to know what that's going to mean, whether that's a technology firm acquiring, one of those top 4 firms, or someone's going to get broken apart, or something like that. But I think that's a bold prediction that we can see what it's going to look like in 10 years.
It is a bold prediction. Now, I can't hold your feet to the fire for a decade that you were wrong about that, but that one of the big 4 banks will not exist in their current form in the next decade. That would be you get credit for bold.
I'm going to hedge my prediction by saying somebody else will nudge one of those top 4 maybe out. I mean, obviously you've seen a lot of these regional bank consolidations that have come. So that's my hedge, is that if that prediction doesn't work, then somebody's going to nudge one of the 4, out of 4th position or something.
Yeah. All right. Well, I'm going to keep my eye on this one. This will be it's be interesting. Chad, thanks so much for the conversation.
Thank you.
Really insightful. I appreciate you making the time.
Yeah, thank you so much. Have a great day.